What's up, traders, and welcome back to another weekly forecast. So, with all the data last week and all the rates that were published, this week we have sort of a direct follow-up. So, let's take a look what is expected this week and how that could affect our chart and could provide us the next opportunities. So it starts with some bank holidays actually in Britain, then in Asia as well. But on Tuesday we have cash rate decision in Australia, where while everyone is expected to cut the rates, Australia is expected to hike the rates due to the recent heavy inflation data they've been releasing. So this is expected to happen at the beginning of the week. Then pay attention that this is the jobs market week in the US. It starts with the JOLTS job openings. It continues all the way to the non-farm payroll, the ADP of course during Wednesday, but then the main focus is the non-farm payroll that is expected to be released on Friday. And while the last read of the non-farm payrolls was very positive relatively to the one before, this one is expected to show some decline again, and this could be critical as when the job market is weak, the Federal Reserve hands are tight and the Fed is not the Fed is unable to make quick decisions and cut the rates very fast. So again, the job market should be a main factor of what will the Federal Reserve be able or unable to do in the next reads. What does all that mean to us when it comes to the charts? So let's start with the euro dollar, which the last week was trying to create some two waves to the downside here and blocked with the bullish divergence to create the rally. However, the recent data is not really promising for the euro. So the way I see that, there are a couple of main scenarios from here. Scenario number one is that the euro is going to complete a deeper ABCD correction, possibly back to this rising trend line, broken resistance that acts as the support, and these couple of lows that act as a heavy demand area. Now, there is a good chance the euro is going to drop closer to that, and from there we should be looking again for the buy opportunities. And there is always the probability that we are ahead of a range here before the next bullish run will take place. So the way I see that, the euro dollar, we should be looking on the dips it will create, and from there buy opportunities. The next one, a very interesting one, is the dollar yen. So the Central Bank of Japan comes and sends very clear warning to anyone who is betting against their currency, and say this is kind of the last warning before we take actions. We saw the Japanese yen strengthening last week dramatically, but then it slows down before the weekend. And the way it looks right now, that no one is really impressed with just empty words. So the Central Bank of Japan at some point will very likely have to act and not just throw threats. So what does that mean in terms of the opportunities? Ideal scenario for the dollar yen should be still cleaning this peak before it actually drops down. However, as it already holds this resistance, and there is a bearish divergence here between the last highs, higher highs on the chart versus lower highs on the MACD, there is a chance that this area creates a peak, some pullbacks, and then something big to happen. For that, I would be looking for the next chart opportunities. So as you can see on the daily chart, we got a fake peak here and then lower lows on the chart, which now also followed by lower lows on the MACD, completing a classical bearish convergence. That to me means that sell the rallies here as long as the peak holds definitely could make sense. So if we go to the lower time frame, like the 4-hour chart, for example, the broken support here now acts as the resistance, while all these highs act as a strong supply. Pay attention to these two big candles that were gaining the bearish momentum. So couple of waves to the upside here, or sometimes it moves in a ranging structure, something like that. And if it managed to hold that and break it down, that could be a very interesting opportunity for the sell. And the next one comes from the Bitcoin. Recently we reviewed this one, and if you missed that, make sure you follow our channel, subscribe, and follow these trading opportunities we share here for you. So what we reviewed is that this was a classical breakout on the weekly chart with a high probability of a retest, and the closer it gets there, the stronger the pressure should be on the bearish direction. What I would be paying attention to is this spike here, which, let's enlarge the charts here, this spike here, which act as a very strong supply area. This is where the sellers took the control. Think about it. Range consolidation in that case, break to the downside, some rejection during the week, and bam, sellers again take the control. This zone is strong, and the closer we get there, the stronger the pressure to the downside would begin to be. And if we go to the lower time frame, take a look what starts to happen here. We start to develop a bearish divergence. As you can see, higher highs on the chart starts to be contradicted and countered by lower highs on the MACD, which means the rallies that happen now are weaker in terms of the money flow than the ones before. That usually means that less and less and less buyers are involved, and when it reaches key zones, that's where the sell is kicking in. So the closer we get to the weekly levels we just saw, the broken consolidation, the supply level there, the stronger this area would become. This is a dynamic resistance. Watch out for this zone. The closer we get there, the stronger the sell should be, and from there I believe that Bitcoin is heading down again. The final one is S&P. What is happening with this one? After completing another peak, it looks like this one is unstoppable. However, look what starts to build up here. Higher highs on the chart versus lower highs on the moving average of the MACD on the weekly chart. This is a strong sign of a bearish divergence. And here on a daily chart, we run into, as you can see, some peaks on the MACD, which usually means it is slowing down before some drop comes. Now, this peak, I believe, is setting up. The question is it temporary retrace before another peak and then drop down, when we will have weekly bearish divergence followed by the daily divergence? That's usually a massive case. However, in some cases, it just moves as a V-shaped pattern. Strong move up, strong move down, some consolidation, and then a break to the downside. How should that play on the lower time frame? If that is what's about to happen, then on the lower time frames we usually see fake highs, like false breakout to the upside, then price to flip and start to make lower lows. From there we are after the sell. However, if it just makes a V-shaped pattern, then look for the current lows to be broken, retested, and from there this should be our sign to look for more bears to take the control. So that's it for this video. I hope you find value in watching this, of course, and in the trading opportunities. Make sure you subscribe to get more trading education, more trading opportunities and insights during the week. And thanks for watching. Best to you and yours. good trading, and we will see you soon with many more opportunities. Good trading. Bye for now.